Swayam Prabha. Digital India. Educated India.
Good afternoon, dear students. Today in this particular part, in this particular video, we will be discussing about what are various types of advances. I think you know it very well that banks are basically there in order to get money. They are basically accepting the deposits from the public, and ultimately that deposit, that amount is basically used by the banks to give loans, to give advances to public, to business and the needy fellow. So one thing, main thing that is there, the banks are accepting deposits and they are lending money. So these are the basic things, and now in this particular video we will be restricting our study regarding what are the various types of loans, what are the various types of advances. So let us start. So lending money, as I have mentioned just now, lending money is basically the core function of a commercial bank. In fact, banking institution is known as banking institution only because if it is accepting deposits from the public, and then that money that the banking institution has collected, it is being used by the banking institution to lend it to other parties. So that is the main core function, that is the main function, primary function of a commercial bank. And the money that has been accepted by the banks from various persons, from various parties, that money can be lent by. So basically banks are giving money, banks are providing money, banks are lending money to various customers. It may be you may say some company or some businessman may be there, some trader may be there, or anyone else, any person may be there. He might be needing this money, he might be requiring this money in order to finance his son or daughter's education. So various customers may be there. And one thing more is there, that the lending is always for a particular period. It is not for the lifetime, it is for a particular period. And the money that is given, that is provided by the bank, the amount that is given, that is provided by the bank to the person, to the customer, that is known as principal. And generally banks charge interest on the amount that has been given by the bank as principal, as loan, as advance. So we will be discussing all these basic types of advances, basic types of loans I will be discussing with you. So we will be starting with overdraft. Now what is overdraft? Actually, what is the meaning of overdraft? That is, in simple words, we may say that overdrawing, that is, in case you are having rupees 10,000 in your account and you are withdrawing an amount that is somewhat more than, that is someone higher than this 10,000. It may be 10,500, 10,000, it may be 11,000 and like that. So basically what is an overdraft? You see, overdraft is an arrangement that is there between the bank, between any bank and the customer. It is the arrangement between these two parties. And what is there in this arrangement? As per this arrangement, the customer is allowed to withdraw the money that is over and above the credit balance that the customer is having in current account. So that is overdraft, and this limit is the agreed limit. It is agreed upon by by these parties according to some parameters in advance. So that should be kept in mind, and it is generally allowed to, you should be keeping this in mind, that overdrafts are given to current account holders. That is, it is not given to saving bank account holders, it is given to current account holders. And you know it very well that basically current accounts are opened by the business class, that is, you may say businessmen, companies and all that. Interest, as I have already told you, that banks will be giving you money for some interest, as interest is the main source of income as far as the banking institution is concerned. But in this case, for overdraft, banks will be charging a higher rate of interest. They will be charging a higher rate of interest on daily debit balance of this overdraft account. So it should be kept in mind that a higher rate is charged as far as overdraft is concerned. And what banks may need? The banks may need a written application form and a promissory note duly signed by the customer. It will be basically required by the banks in order to grant you this overdraft facility. And you should also be keeping something in mind, that there is no need to open a new account as far as overdraft facility is concerned. There is no need to open a new account. So overdraft facility is there, and you may use this amount, you may use this particular amount for the specified purpose. Now, what are the various, you may say, what are the various types of overdraft accounts? So generally two types of overdrafts are there. First, we may say temporary overdraft, and the second one we may say it is secured overdraft. So two types of overdraft accounts are basically there. Now, what is there in case of clean overdraft or temporary overdraft? So as I think you should be clear regarding that overdraft facility, over a period of time you are building some relationship with your bank, and the relationship should be good, it should be cordial. And so in case of clean overdraft, what is there? It is allowed mainly, basically, primarily on the basis of personal credit of the party. And in case your personal credit is good, so it will be given to you, it will be provided to the concerned party. So it should be kept in mind. And when we allow a customer to draw against his check sent in clearing, it also falls under this category only. Now, what is there in secured overdraft? Sometimes what happens, in general, the meaning which we take, that is relating to clean overdraft. In secured overdraft, what is there? In secured overdraft, some limit is given. We are allowed up to a certain limit against some securities, against some financial instrument. It may be FDs, FD receipt, FDR, it may be LIC policy, it may be National Savings Certificate, or it may be shares. In case of shares, the margin will be higher, and against share they will be allowing you a limited amount that is lower than the security that is there in case of other categories. And you should know that it is very popular it will not involve many formalities. It is granted and no new account is opened even in secured overdraft also. Then cash credit. Now, what is cash credit? Before discussing cash credit, I will be discussing with you that in case of business, we need finance. Actually, finance is not only in business, finance is very much needed in every walk of life. That is why finance is known as lifeblood of the business. But let me clarify it with a simple example. First of all, you will need money to buy raw material. Then this raw material will be processed, some processing will be there, and it will be converted into a work in process. And after that it will be converted into finished product. Some more applications, some more processing will be there, and it will be converted into finished goods. After that it will be sold. In case it is sold for cash, it is very good. Cash will be realized then and there only. But in case it is sold for credit, so if debtor will arise, and the debtor will be paying you the amount after some time. So money will be realized at that particular point of time. So this is known as working capital cycle, or this is known as cash cycle. This is known as working capital cycle or even cash cycle. So in order to keep it running, in order to keep it moving, we constantly need money from the bank. So what is cash credit? It is an arrangement by which the banks are basically allowing their customers to borrow money up to a certain limit that is fixed, and it is in common parlance, it is known as CC limit. CC, here CC stands for cash credit, and the customer is entitled to withdrawing the money whenever the need is there. And one thing should be kept in mind, that interest will be charged only on the amount that has been withdrawn by the customer, and not for the entire amount that has been, you may say, approved as a limit. So in case your limit is 1 lakh and you have used only 35,000, so then in that case bank will be charging the interest only on rupees 35,000 for the period for which you have enjoyed, you have used this amount. So it should be kept in mind. And CC limit will depend upon various things. It will depend upon your debtors, it will depend upon your working capital, it will depend upon your stock inventory. And kindly note that in case your otherwise, you may say it will depend upon various other assets. So your raw material, your processing, your converting, so it will be dealing with that. Now, what are the various categories of cash credit? Again, two categories are there. First is open cash credit and the other one is key cash credit. Now, what is the main difference? You may see, in case of open cash credit, what will be there? The borrower will be maintaining a debit balance in the account up to the sanctioned limit or up to the drawing power, which is lower. So the cash credit limit will be there, and the CC facility will be offered to the borrower normally either against pledge or hypothecation of stocks of raw material or work in process or finished goods and debtors. So it should be kept in mind that it will be given against the security of pledge of or hypothecation of these things. Now, what is there in case of key cash credit? What will be there? Here again, he will be there, he will be lodging the stock in his warehouse, and the key of that warehouse will be handed over to the bank. Goods are there, and basically those goods are pledged to the bank. Those goods are lying in the warehouse and those are basically allowed to be removed by the borrower on remitting into his CC account the amount equivalent to the value of the goods. The banks would release further funds to the borrower within the drawing power sanctioned limit on borrowers depositing more stock in the warehouse. So that is why, therefore, it is known as key cash credit. So it will be depending upon that. So these are the two main categories of cash credit. Now, what is loan? What is loan? Loan is basically the amount. Banks are there in order to accept deposits, and banks are there in order to lend money to the other parties, to businessmen, to common man, or anybody, company it may be. So what is loan? Loan is concerned with providing, advancing a lump sum for a specific time period at an agreed rate of interest. So rate of interest will be decided, it will be decided in advance, and loan will be given, loan will be credited to the borrower's account, and the loan, the amount that is given as loan, it is basically known as principal, and bank will be charging the interest on this amount, that is on principal, and interest is charged on the full amount sanctioned. So in case you are using it, not using it, but once the loan has been given to you, interest will be charged on the full amount. I will be discussing in next video also that two types of loans may be there. It may be secured, it may be unsecured. In case of secured loan, some security will be there, it will definitely be there, and banks will be providing you loan only in case you are providing, you are giving, you are depositing, you are you may say giving some security. And in case of unsecured loan, it is not necessary to give some security. Even then bank will be giving you the loan. So that we will be discussing in the next video. Now, categories of loan. You see, one thing I would like to say that various categories of loans are there. Various categories of loans are there. Loans may be divided on various bases. It may be on the basis of, you may say, time period. It may be on the basis of sector specifications. It may be on the basis of purpose. It may be on the basis of time period. So various categories of loans are there. It may be as far as sector is concerned, it may be there whether the loan is for you may say priority sector like agriculture and all that MSMEs, or it is for other sectors. Regarding time period, whether it is for 1 year or it is for more than up to 1 year or it is for more than 1 year, then purpose may be there. So various categories are there, but in this particular video I have simplified that, and I will be discussing with you the major categories of loans. So first is personal loan. I think as I have told you on various occasions that finance is the lifeblood of business, or otherwise also a simple human being, a normal human being needs finance for various purposes, various for various needs we need loan. Now, what is unique in personal loan? First of all, these are unsecured. These are given for personal needs. No purpose, no objective, no purpose of the loan, taking loan will be asked and you will be given the loan. Generally, amount is not so much, amount is less, and no particular purpose is asked. Processing fee is definitely there, and as far as formalities are concerned, no doubt formalities are there, but as compared to other loans, let us say for home loan, these are too much, but in case of personal loans, no such detailed formalities are there. Only few formalities, basic formalities are there, but because the loan is unsecured, so interest rate is basically high. It will be high in this case, so it should also be kept in mind that it is high. Now you may take personal loan in case you needed the funds immediately, so it may be used for any purpose, as no purpose is required to be mentioned, but it is costly, interest rate is high, but still banks are providing these loans as they are there to give loans in case people are depositing money with them. So banks are also earning the money through interest income. So they want to increase the spread, they want to earn more than whatever amount is given by them on interest on deposits. So in order to increase the spread, they are basically giving, they are basically spending, providing personal loans. And for consumer it is very beneficial. This money may be used for any purpose, for some domestic purpose, for buying something, or in case you are planning something, but some you have the money is not, some money is needed in order to buy something, so you may take personal loan and it may be used. Then term loan. Basically, term loan are there for a fixed term. It may be for 2 years, 3 years, 5 years. So basically, these are secured loans. Some security will be there, and generally the tenure of the long-term loan is long tenure is there, and formalities are generally there. Formalities are generally more than the formalities in case of personal loan, and some restrictions, some restrictive covenants, conditions may also be put. These may also be there. And one thing more is, I would like to say that interest that is paid on term loan, it is a tax deductible expenditure. It is a tax deductible expenditure. You know, in case of companies, we are calculating EBIT, earnings before interest and tax, and then interest is deducted out of that, and then we find out, we calculate EBT, that is earning before tax, and then tax is deducted on that particular amount. Tax will be deducted from EBT. So the main point is that interest paid on term loan is a tax deductible expenditure as far as companies, as far as businessmen are concerned. They may take the benefit of financial leverage, they may take the benefit of interest that has been paid by them on this term loan. Then home loans. I think it is everybody's dream to own a home. It is everybody's dream to buy a home. Home is not necessarily, you may say, simple house, two-story house, three-story house. It is not so. It may be even flat also. So that is covered under home. Home loans are taken by the public. Home loans are given by the banks so as to facilitate buying of the home by the customer. So that is there. And these home loans may also be provided by the banks for renovation purpose. You may also do a renovation by taking the home loan. And as these are given to buy home, so something tangible is there. Some home, some house, some flat, it is there. So it is a secured loan. The documents, the registered deed will be with the bank, and in case of non-payment, in case of non-payment of the loan, banks will be selling the property and they will be recovering their amount. And from time to time, you might see on the internet, might see that various banks are giving the ads for the auctions. E-auctions, electronic auctions are there for such properties, commercial property, or such kind of properties you will find. Let us suppose someone had taken the loan, but he or she is unable to return it. So ultimately, that home will be occupied. That home will be taken by the bank, and ultimately banks don't need home. Banks need money. So they will be selling such homes, such houses, such flats in the open market through auction, and ultimately they will be recovering their money. And it is also there. That is why it is fully secured. That is why banks are usually interested in giving home loans, and it is normally for a longer tenure. It may be for 10 years, 15 years, 20 years. So it may be there, and the rate of interest is comparatively reasonable. And nowadays, these days, you will find due to cutthroat competition, due to competition or interest of home loans, these have fallen to a great extent. And while approving this loan, while approving the home loan, the credit score of the customer is also kept in mind. Now, car loans. Car loans may be there in order to buy a four-wheeler, in order to buy a vehicle, in order to buy a car. In case his income allows, he may purchase a car by taking a car loan. So car loans are also provided by the banks, and these are also secured to a large extent, as the documents, original documents, will be kept by the bank, and again the same thing will be there. In case the person is unable to return the money within the specified time, so in that case the car will be taken by the bank. So its possession will be taken by the bank, and they will be selling it in the market in order to recover their amount. So in that context, it is secured loan. And various banks are coming up with various innovative, creative schemes in order to attract much more loan seekers. So it should be kept in mind. Now, two-wheeler loan, like car loan was there. So in order to buy a two-wheeler, in order to buy a bike, in order to buy an Activa, in order to buy any two-wheeler, so two-wheeler loans are also there, and these are given by the banks, and these are also secured loans in that sense, as the registration documents will be kept by the bank, and in case the person is unable to return the money along with interest, so the possession of the two-wheeler will be taken by the bank, and they will be selling it in the market in order to recover their amount. So basic purpose is to recover their amount, and before granting this, banks may take some post-dated checks from the customer. So it should also be kept in mind. Then agriculture loan may be there. It is clear from its name only. It is clear that these are basically given to farmers, and it is also covered under priority sector lending, as I was telling to you, as agriculture loans to MSMEs. So these are basically covered under priority sector lending, and some limit may be fixed by the RBI, and banks are required to at least that percentage of loan to the priority sector lending. So similarly, agriculture loan is one of the priority sector lending. It may be given by the banks to the farmers. And what is the purpose of agriculture loan? It is to meet the expenses of their day-to-day or general agricultural requirements. And as far as agricultural loans are concerned, I have already told you these are covered under priority sector lending, and these loans may be for short term also, and these may be for long term also. It will depend upon the need, type of you may say need, what is the basic purpose for which you are taking the agriculture loan. Then gold loan may be there. Gold loan may be there in order to meet medical emergencies, in order to expand your business. You may take a gold loan. What is unique in this case? That you will be you will be providing your gold as security or collateral. So for the banks, it becomes secured loan in the same way that in case you are unable to return, banks will be selling the gold in the market in order to recover their loan. And for the person, it is also very useful, as they will be getting the money, instant money will be provided to them by the banks in order to meet some medical emergency or in order to expand the business. Then education loan. I think it is very much clear. Nowadays, education is too much costly in order to finance the fees of the course, which is even in, it may be in India or even outside India, it may be in abroad. So education loans are provided by the banks, and nowadays, particularly in Punjab, a number of students are moving for higher education in countries like Australia, New Zealand, Canada, and one thing is there, that basically their parents are also taking education loan in order to for the purpose of the studies of their wards. So it should be kept in mind. Then what is discounting of bills of exchange? First of all, what is bill of exchange? I think it is clear to you. Being a negotiable instrument, it is financial instrument. When something is, some goods are sold by the seller to the buyer, it is very obvious that buyer will be saying that I will be paying after some days, after it may be 70 days, after 90 days, but seller is also needing money. Then what is the concept of bill of exchange? That bill of exchange will be drawn by the seller. So seller will be drawer, and ultimately he will be sending it to the buyer. So buyer will be accepting it. The buyer is also known as drawee, or he is accepting the bill. So he will also be known as acceptor, and ultimately that bill of exchange, it becomes BR, bill receivable for seller, and bills payable for the buyer. In the balance sheet of seller, it will be on the asset side, being current asset, and on the other hand, in the case of buyer, it will be shown under current liabilities as bills payable. So in case the money is needed, by the seller, he will be depositing that bill of exchange to the bank, and bank will be discounting it. Various conditions are there, like it should be trade bill and all that. And if in case everything is fine, all the conditions are being met, then bank will be clearing it. When will be discounting it, basically they will be giving you the money. Let us suppose it was for rupees 2 lakhs. So banks will be deducting some money, that is known as discounting charges. And after that, out of 2000, let us suppose 10,000 is deducted, so 1,90,000 will be given to the person. And it is basically, it will be serving the needs of seller also. Ultimately, on the due date, the bank will be presenting the bill to the buyer, and if the money is paid by the buyer to the bank, it will be okay, the transaction will be complete. But in case some dishonor is there, so it will be very difficult. Bank will be again approaching the seller, and some legal recourse should be there. So it is the discounting of bill. It is also done by the banks. So it fulfills the financing needs. So it is some sort of, you may say, advance. In this case, bank will be deducting some money, and ultimately they will be giving the money to the customer. So, but in this case, interest is basically received by the banks in advance. I have already told you in our example, I have told you that they will be deducting rupees 10,000 and giving to the seller 1,90,000. So In other words, they have received the interest in advance. So this was the concept of discounting of bills of exchange, and it is also very useful in the world of business. Now, a few restrictions are there. A few restrictions on lending are there as per the Banking Regulation Act. So, I will be describing these restrictions in brief. First of all, advances against banks' own shares. Advances against banks' own shares is not allowed. Advances to the directors of banks can't be given. Advances to the companies for buyback of their securities, again it is not allowed. Granting loans and advances to relatives of the directors, there is a restriction on that also. And similarly, restrictions are there on grant of financial assistance to industries which are producing or consuming ODS, that is ozone depleting substances. Similarly, restrictions are there on advances against sensitive commodities under selective credit control, and banks and their subsidiaries should not undertake financing of badla transactions. Similarly, banks should not extend bridge loans against amounts receivable from the central or state governments by way of subsidies, refunds, reimbursements, capital contributions, etc., subject to certain exemptions like financing against receivables from government by exporters like duty drawback and IPRS. Dear students, that was all from my side as far as types of advances are concerned. Okay then, thank you.